Record a little bit and see what it does.
Seems to be fine.
So then just hit it again to stop it.
Have to come, and I promised that I'd put them on the agenda first because they've got a later appointment. Could I ask our Assistant Chair, Nikki Michael, to say a brief word of prayer?
Manishi ulikishku nikuna lumakiti uinue Manishi lenafeyo og lenafekoyo og Manishi mudi og money. Please bless us here today, all the Lenape men and women surrounding us. Please give us all the wonderful things that we acknowledge and the peace of mind to make good decisions for our people that will bless our monies and the good things that we have, like water and food. And we just thank you so much for this wonderful spring day. And with all that said in your name, amen.
Amen. Our secretary has told me it's going to be about 10 minutes before she's got the minutes and everything. So could I hear a motion to suspend the agenda and go ahead and let Scott Thompson and his associate from Harvest make their presentation? So moved.
I'll second.
Okay, it's been motioned and seconded to suspend the agenda and for Harvest to proceed. All in favor, say aye.
Aye.
Opposed? Scott, if y'all don't mind coming up to the front, I think we've got a microphone where everybody in the audience can hear too.
Good afternoon.
Just push that button.
Good afternoon. Everybody hear me?
Yes.
My name is Scott Thompson. I'm the Trust Administrator for the Delaware Tribe of Indians Account. This is Joshua Randolph. He's our Regional Investment Officer. He's kind of the brains behind the team. And no, not the beauties of it. We're here to make a presentation, let you know how the investment performance has been for the accounts, and of course answer any questions you may have. But first and foremost, I want to thank you for the continued support of the tribe. We do really appreciate the opportunity to serve you. I do have some packets to pass out, and I'll turn the mic over to Josh to make the formal presentation.
Okay, I'll give you on the right side of your packet, we'll just run through the two different accounts and give you an update and let you know how the accounts have done. The first piece is on the main account, and I'll just start right at page 1 there. This data is as of last Friday, so it's very current. You can see at the top left, it shows the balance of the account, just a little over $3.8 million. As you know, the portfolio is designed to conservative. The allocation is only 30% in stocks or equities, with 70% being in fixed income or cash. And you can see on the top right, go through some of the key statistics. About the third line down, the annual income that the portfolio is expected to produce, a little over $125,000, and a current yield of 3.3%. That's based on current bonds and stock dividends and as a whole. But again, 30% equity is the target for the account as a whole. Okay. Next, and stop me at any time there's any questions. I'll go through this briefly, but please stop me. The next several pages list the individual holdings, such as page 2. You can see broken down by different categories or sectors of the market. We own the individual stocks. Our team that manages the equity and bond portfolio oversees that portion. They monitor those securities, they sell, they buy when necessary, they reallocate based on what is determined to be an appropriate allocation into those different positions. But you can see on that page it lists the cost of those positions and the gain and the yield on the far right, the dividend yield. Again, it's broken down by different sectors. You can tell that probably most of those stocks on there you're very familiar with. Our strategy is large, solid, dividend-paying companies that are very stable. Page 5 begins the holdings of the bonds or fixed income. Again, much like in the equity or stock side, they're very diversified, beginning first by sector or types. It goes through and lists. We'll have corporate bonds, we'll have government bonds, we'll have government agency bonds. Again, we use in this account individual bonds rather than bond funds or mutual funds that are managed by our team. I'm going to have you jump forward. Yes, ma'am?
The last part again.
We use individual bonds rather than mutual funds because we have the capacity. We have our own portfolio team in-house, and so we do not have to shift that onto a fund manager or mutual fund. That does two things. We're better able to design the portfolio specifically for you, but also it takes away that expense of investing in a mutual fund because we won't have that third-party expense. I'm going to have you jump forward to page 12 just to give you a quick update on some strategy. One of the things that our team does is from time to time they will overweight or underweight certain sectors of the stock market, and this just lets you know kind of right now where we stand in our opinion. There on 12 of 15. You can see the S&P 500 is the lighter line, or the market. The dark line is your portfolio. I'll just kind of point out that there's a few areas where we are overweight an allocation to that sector. You can see healthcare, second to the top. We've got quite an overweight to that, and I will tell you that since a year ago, last summer, that sector has been one of the top performing sectors. So that has been a good move by our team. We're also overweight discretionary stocks. What that means is the type of stocks that people, when they have lots of discretionary income, they're willing to go spend. So Walt Disney, things of that nature, and those have done very well as the economy has improved. We're currently underweight financial stocks and energy stocks, and those have been some of the laggards the last year or so. So our team has done a good job of shifting the portfolio. We will never be significantly overweight or underweight any sector. We're just not into taking a risk, betting big on one area of the market, but there are times like now where you'll see slight overweights or underweights. On page 13, this gives a real good recap of the fixed income portfolio. the bond portfolio. On the top right, you can see where it says rating. Again, one of the most important things about the portfolio is safety. And so you can see the average rating as we blend the entire portfolio of bonds together is AA-. So a very high quality, very safe bond portfolio. If you look at the bottom of that section, you'll see a term called duration, and that says 4.85. As we go into a time where interest rates are potentially rising, a lot of times that can be detrimental to a bond portfolio. Rising rates makes the price of your existing bonds go down. And so one of the things that our team has done is designed your portfolio to be very short in maturity or duration. So if you look at that 4.85, what that means is over the course of the next 5 years, or 4.85 years, the portfolio of bonds will be coming due for the most part. And so as rates rise, every year about 20 to 25% of that will be available to reinvest at higher and higher rates. So what you don't want to have right now in a rising interest rate environment is very long bonds, because not only will they lose value, but you won't have them available to reinvest as rates are higher. So that's a strategy that our team has employed over the last few years. On page 14, at the middle of the page, you can see fixed income subcategories. Again, just like on the stock or equity side, where there are times that we give more weight to certain categories, we do the same on the bond side. And you can see at the top, corporate bonds are the most weighted category in the portfolio, 40%. As you know, probably government bonds, treasuries are very low yielding right now, not providing a lot of return. So our focus is on investment grade corporate bonds, and that's done very well for us, not only from a interest rate standpoint or yield, but also from an appreciation standpoint. Finally, on page 15, the most important part is how the account has done. This is as of the month end of January 31. The rest of that information was as of a few days ago. If you look at the very top line, about the middle of the page, where it says total managed, that's how this account specifically is done. And so over the last 12 months through January 31st, you can see 7.75%. And for the year of 2013, the calendar year, 9.11%. Very important to note that below that, you can see how the benchmark, or how we are measured as a money manager, was 8.4. So we did better than the market or our benchmark, and that's part of what you're having us do for you. If you look down below that, again, this portfolio is very conservative, only 30% in stocks. And you can see the stocks, though, in 2013 did 35.4%. We'd like to see that every year, but that doesn't happen very often. But when it does, we're glad we participated. Our team did a great job of picking stocks. You can see that the index below was 31.81. So their picking of stocks and the allocation to those different sectors, they did almost 4 percentage points better than the market as a whole. And then you can see below that the bonds are fixed income. For the first time, actually only the second time in the last 20 years, the bond market was negative. And so we've been through a period of time where interest rates were going down, which is typically a good environment for bonds. This is the first year where we've actually seen bond rates rise, and therefore bond prices were down over in 2013. Finally, on this, I'll just point out to the far right, since this account performance has been tracking, which is over 10 years now, at the very top right, 6.69% per year versus our benchmark 5.58. So we've outperformed by over 100 basis points, or 1%. So we're very pleased with how well we've done for the tribe. kind of stop there and see what questions or comments or concerns you might have.
You say you've outperformed, and how do you figure that out, like within the index?
That's a great question. You see where it says Lipper Large Cap Core, underneath where it says equity?
Yes.
Lipper Large Cap Core basically is a basket of 30 large money managers like Vanguard, American Funds, Delaware Funds, T. Rowe Price. We're comparing ourselves to other large money managers that are managing large cap funds. And so one of the things we look at is how are we doing versus our peer group? Great question. And the same thing on the Barclays aggregate bond.
Where are those 30 from? Are they just national?
Yeah, across the,
United
across
States.
the United States. And they're typically your largest, mutual funds out there, such as American Funds. And I'd be happy to get that list if you'd like to see. But we're kind of proud of that Little Arvest is beating mutual fund companies that are, multinational, really.
It's not cited on this report, but it's also outperformed the S&P 500 for the same period of time.
Okay. Well, I like Harvard, so that's...
Well, thank you. We appreciate that. Other questions or?
I've got, you have one, brother?
I've got a question. This, our reinvestment money that goes back in, that's going back into every year going back into the fund. Is that been allocated the same way as the rest of the money in interest bearing?
No, many years ago, we were asked to invest that a little bit more conservatively. So it's been primarily in bonds or bond funds.
That's what we're not earning money with.
Yeah,
It has basically had the experience that Josh, conveyed a moment ago. Since it's primarily in bonds, it's still earning its yield, its interest is still coming in, but the price fluctuation has been downward as of the last year, and so it's not gaining a lot.
We're debating on whether to be a little bit more risky with that reinvestment money. And
Well, that was actually one of our points for the board today. 10 years ago, you had the wisdom to see kind of dark clouds coming on the economic, front, and you selected a rather conservative portfolio, and it's done very, very well these 10 years. One of the things that Josh and I and our team of portfolio managers are constantly monitoring is, have there been any kind of reversals in those asset classes? And we do believe that bonds will be volatile. They'll have months where they improve and months where they reduce in value. We think there might be an advantage of slightly improving or increasing, I should say, your equity exposure. Because among all the classes of assets, they're still the most fairly valued, maybe even slightly undervalued compared to other classes.
to be quite truthful, the budget we have for 2014, we can't operate on. We're going to be turning people away the last 3-4 months of the year. So we've got to come up with a little bit more aggressive plan, some way to earn more money for the Delaware people. But still, we don't want to risk it of losing it.
Sure.
But we're going to have to be a little bit more aggressive, I believe.
And what would be your recommendation along those lines for that amount, that 10%?
$96,041 as of January 31st.
Now, in the sub-account where we move the income is on that second page, and if we're on the same, that one's actually $162,000 as far as the balance in that account of what we call the income account, where all the income from the larger account is swept over to that account. And on the first page of that one, as of the other day, it was $162,000. But it is all in fixed income or very safe.
Yeah, but we have what's called the reinvestment fund. It's a $96,000 that we want to put back in, and that's what we're talking about.
Oh, okay.
What can you do with that to increase a better yield? Besides, you said it was in bonds, which is a very low yield. So
such as, we're looking at our education committee, for instance. We're having to lower our scholarship amount. And we really need to figure out ways to increase that in our community services.
Part of the difficulty in this place in the markets, equity and bond markets, but primarily bond markets, is yields are at historically low levels. And so if we were to invest money into the bond market, we're pretty much going to be earning a very small amount of income. If we go into equities, more into equities, I believe that you're limited in what you can draw from the principal side. Is that correct?
Right. What we're looking at is the 10% of the interest every year is to be reinvested back into the principal.
Okay.
Or else, it's my understanding that it's not been done that way. It's been set aside and invested separately.
In that case,
bonds.
In bonds.
So just to clarify for my sake, we're talking about the total reinvestment of the 10% going back to
Yes.
principal?
And whether it would, if we could be a little more aggressive with that 10%.
Now, since most of that, what we show here is in reinvestments, $96,041.
Okay.
Since most of that is tied up in bonds, if we decide to change our allocation on that money, we're going to have to do it step at a time as the bonds become due, correct?
Yes, sir.
Can't do it all at once.
Correct.
So the only thing we could do is take whatever our 2014 budget was, and then next year we could do the same thing and be a little bit more aggressive with that.
Right.
But we're not going to be able to take the full $96,041 because it's in bonds, and we'd pay a penalty if we were to cash some of those bonds in, I would believe.
I have bonds, I don't have to pay a penalty.
If you cash them in early, you would.
If I cash them in early, I cash what he's talking about.
Well,
Would you not pay a penalty if you cash them in early?
the word penalty would probably be not the best choice of words. You would be basically selling at the current price of the bond. So if the bond happens to be, if the bond value happens to be a little lower at this moment in time, you'll be selling a slight loss.
Which they all are.
Right.
They're all a lot lower right now.
They are lower, yes. But not all of them are at a loss by any means. A lot of them are still very profitable.
So you'd be selling them short.
Be selling them at a level lower than they have been.
So it would be best to leave them what's already there and just do the 10% per year and more aggressive. Wouldn't you believe? Wouldn't you agree with that?
Yes, sir.
Yep.
Josh, I had a money manager down in Tulsa. This was like 12, 15 years ago. Said that a group should absolutely put at risk 1 to 5% of their assets, because that 1 to 5% put into a risky proposition might make more money than the 95%. Would you, or would you specifically, Josh, agree with such a statement?
Well, I think that's it's a good point, and that's one, and I didn't really cover that. One of the things that we do in there, the majority of the equities or stocks are in large cap, IBM, ConocoPhillips type companies. We also have some in international, which begins getting more on the risk, and we have some in mid or smaller companies. And so we attempt to do that, adding risk with about 10% of the equity portfolio, which is about 3% of the overall. The question then becomes is how willing are you to go in the risk category? International and mid-cap as it relates to large companies certainly is more risky, and over time those do better They're certainly more volatile from year to year. But then it becomes how willing is the board to be even more risky. We do have portfolios that have the ability to go riskier with riskier assets like small cap, commodities, things of that nature. Hasn't really ever been the stance of this account because it was really meant to be more of a safe endowment type account, but that's something we have access to, but you just go out on the risk limb a little bit to do that.
I think the majority of the money, we want to keep it that way, to keep it safe, but the reinvestment money, I think we want to start being a little more risky with it.
The 10% of the income.
What are some of your, what kind of percentage are you talking about in some of these risky accounts? How much have they been earning, just roughly, right off the top of your head?
Well, for example, even our core equity, which we wouldn't consider overly risky, did 32 last year. Now, again, that was a banner year, but on average, that account, our large cap, core has done more than 8%, on average. Really, in our opinion, to go into much riskier, you may achieve 9 or 10, but you're really increasing your risk quite a bit just to get 9 versus 8 or 10 versus 8, which, 1 or 2% certainly helps, but it's just whether or not that's worth that additional volatility. I think we would probably recommend with that reinvestment 10% amount that we would just go back into our equity positions to some degree, which have done fantastic and really are going to do most likely better than bonds over the next 3 or 4 or 5 years. If you look at one of the things, just from a pure income standpoint, just the dividends off of the stocks are paying close to 2%. Well, the dividends or interest off the bonds really are only paying about 2.5%. So if you're willing to risk it with some growth on the equity side, your income is going to be almost the same with the potential for upside.
Do I hear any questions from the audience? I'm sorry, Nancy.
You're saying you got 10% of the going back into the reinvestment. Do you have to put the whole 10% in for your spectacular deal over here, or do you have to put the whole 10% in? In other words, could you put in 5% instead of the 10%?
Well, since we've got $90-some thousand in it, I think all we could do would be to take the $12,600 that's budgeted for this year and switch it over. That's less than a quarter or a third to 1% of our total trust funds.
One of the questions that's come up in the concerns that some of our people have asked us is what fees, how you charge fees for handling our money.
Great question.
It's 0.5% on the market value of the account. So if an account was $4 million, it'd be $4 million times 0.5. And that's the annual amount. Divided by 12, and we take out a monthly installment.
Actually, brother, the total budget for reinvestment for 2014 is $10,171.53.
And this percentage, that's a flat rate. You don't charge buying
No.
activity, or
We
just
do
a
not.
flat rate?
We are an investment management firm, and so we only receive the fee that's been published to you since the onset of the account, We do not make anything off of transactions. That's correct.
That's what I understood, I wanted it to be presented so everybody else could understand that too.
On the 90,000, that is the 10% of the income. Is there, I mean, it is in the bond portfolio in the sub-account is what we call it. Would there be a reason operationally that you couldn't take that chunk? Because it's just been segregated into bonds, really as a portfolio shift, whether you do all of it or some of it, to go ahead and move that over into some portion of equities. I guess I wanted to see, rather than certainly the future 10% makes sense, but the amount that you've already segregated, the 90 plus, I don't see any reason why, unless operationally you can't, that we couldn't.
Well, I think the question was that if it's in bonds and we decide to invest it elsewhere, would we be losing anything? Do we have to wait till the bonds mature?
No.
Or will we be losing money to,
You'd be losing on every one of them right now because the price is down on all the bond markets.
Well, actually, in the
There's a little bit of improvement in late January and February.
Is there?
There was. Actually quite significant. We do believe eventually we're going to see interest rates start moving back up again, so time may be of the essence. If we were to employ this strategy, this would probably be the premier time to do it.
actually in that sub-account, which is all in bond ETFs or exchange traded funds, we still have a slight gain. So the gain is less. You're actually correct. It's come down, but we're not in a position where we would be selling them at a loss at this point. Probably would be in the future as interest rates keep going up. So it might be the perfect time to go ahead and take a little gain, make that shift.
On all of them. Is this stuff the trust board, we want to have a separate meeting, discuss it?
I think we should, because, I mean, if we've got gain and no major loss.
John's in charge of reinvestment.
is that, do we need to discuss it or can we move on it today?
That would be up to the board.
Well, you're the leader, you're the treasurer, so it would be your recommendation. that we'll
Would you
follow.
turn your mics on?
Hello, hello?
I think they're on, they're just not, but they're not speaking on.
Is that any better?
Yes.
Thank you. Needed it closer.
Another thing for your consideration, if you do not want me to go down this path, please let me know. Many years ago, when the account was established, there were very specific investment parameters. And I know that some changes have happened recently. And the performance of the account has been stellar. We're just starting to see this difficulty associated with low interest rates. And as you heard us suggest a few months ago, this may be a prudent time to consider some increase in equity exposure for the long haul. We do have other portfolios that are higher yielding, but riskier. Not significant, but they are riskier. For an example, one of the portfolios is almost exclusively corporate bond obligations. And we have a significant amount that's in government obligations, treasury obligations, asset-backed type bonds. This would shift more to the corporate side, and it would enhance the interest earned slightly. Okay, so you're increasing your risk a little bit by being exposed primarily to the corporate world. You are slightly increasing the coupon or the interest that you get off of it. Secondly, we have an equity portfolio that is slanted more towards dividend paying only. This one is what we call a classic blend type portfolio. It invests primarily in dividend paying stocks, but it also invests in some very high quality growth stocks. And it's done exceptionally well. But the portfolio we have in mind pays a higher dividend yield, close to another percent, a full percent. So whereas the average dividend in this present equity portfolio is around 2%, this one will be closer to 3%. Now, none of these are going to be dramatic improvements and may not be able to help you meet these obligations that you're referring to, but they may enhance the overall income that is available to the Delaware, and without taking a lot of additional risk to do so.
Well, the consensus of everybody that's been to the meetings, this last meeting, has expressed an interest in taking some more risk.
Okay.
As to letting it sit as it is now, as Ms. Michael has said, you know, I mean, we're starting to outgrow in needs of what we have to put out. And there's more learned people here in this financial field on this board for sure than I am, and I depend a lot on their word and my personal opinion. And even in things I've done, you know, and you've got to take a risk to get some gain. You have to. As to taking all of it or part of it, that would be more up to this board, you know, since we're basically all on the reinvestment committee anyway. So that would be up to us as a whole on whether we want to do this, take it all out at once and go for risk, or have a meeting, sit down, decide what we want to do, how much we want to go ahead and take out and go in this route. Me, myself, I think we should.
One thing I'd point out too is, and Scott mentioned, that's been, especially the larger account, has been on the more conservative side. And not that you have to follow, you know, endowment standards, but most nonprofits, endowments, they're really closer to half and half stocks, half in bonds. So, and even, you know, slightly above, because they are meant to be perpetual.
So you're saying this is really an endowment?
Well, perpetual.
I mean, seriously, is there much of a difference between our trust money in the investment account than an endowment?
In the terms of it being perpetual.
Okay, that it will keep going like an endowment, it stops at a certain date, is that?
Yeah.
Most endowments, like, for example, universities, they try to limit their access to it, and it's intended to last for the life of the university. And so, fair statement, they typically take 4 or 5% from it, but restrain themselves from taking more than that. They basically try to live off of the income and growth of those accounts. Some obviously have some latitude to take more than that, but they do take a little bit more of a long-term approach, therefore putting a little bit more emphasis on the equity, the growth side, than the fixed income or the interest-bearing side.
You have examples of successful ones that you could show us?
Specifically, no, I really don't. We could give you hypotheticals of how they work, but we can't actually go out and, you know, see how specific universities are done or fared. But we can present some of these ideas that Josh and I have conveyed to the trust board and show you what enhancement we believe will immediately be realized, and hopefully from a long-term perspective as well.
And we could show you, obviously without revealing any other entities' information, but we could show you some other entities that are of that type that have been more endowment allocated, and their returns. Can't show you, obviously, tell you who that might be, but we do have historical information based on that kind of management, if that.
Because I feel like, you know, we're individual, we're kind of unique in the situation that we are in.
Right.
But if there are examples out there, then why are we not looking at those too and weighing that into consideration?
Again, that every entity has different cash needs and their purposes, so that certainly drives a lot of that. But
Yeah, but we're not offering the loan. It's, we have some resources.
right.
So
it's your recommendation to put it into equity, but the higher risk equity, which earns about 1% more money.
I think a summary for me, a statement that would be a potential recommendation that I recommend we propose to you officially, show you all the details, would be that we give consideration to all or part of it going into a different type of equity portfolio that has higher dividend yields. It may not have higher growth appreciation potential. It will still have plenty of growth, but it will have a consistent dividend paying component that's higher than the current one right now. Risk to risk, it's actually slightly lower risk. The equities that we're shifting or considering shifting to, they're actually considered lower risk but higher dividend. So what that would mean for the board is the portfolio you're currently in, if it did 20% next year, the one we're proposing may not do 20%. It may do maybe 18%. However, it's generating larger dividends. The income component that's very instrumental to the board and to the Delaware. The increase in risk comes from shifting from a diversified bond portfolio of United States Treasuries, United States agencies, corporates, and asset-backed to almost exclusively corporate. That's where the risk comes. But there is a higher interest rate or a higher yield that's coming off and available to the Delaware. Does that make sense?
We can certainly show specifics.
And we can show you elaborate detail so that the board can make a decision and, of course, ask for
Count the dividends, we'd come out ahead.
Yeah.
But we are just talking about the 96,000 in a separate account.
$96,041.
We're actually proposing that you give consideration to the main account, too.
Going from 30 to 60, potentially.
The $96,000, where is it in your presentation? You said it's in a sub-account.
That's in the sub-account.
The sub-account that says 100 and...
Bonnie, is it a separate stapled document?
It's not on here.
Yes, there's a separate one.
In the blue folder, there's a separate document.
Oh, okay. Okay.
Yeah. And we actually have that at 160,000. But from an accounting standpoint, you all have that segregated into the reinvestment and the non-reinvestment.
Well, Scott and Josh, I know y'all have to take off.
We're okay.
Are you okay?
Yeah, we're okay.
Okay.
I just have one more question about, you said half of 1% or half of a percent?
Half of a percent.
Half of a percent.
0.5.
Of the 4 million
Percent.
divided by 12. And is that average? I mean, is that typically what other?
Well, what happens is at the end of each month, our system looks at the account value. And just say everything combines 4 million. It says 4 million times 0.5%. Was that 20,000? Yes. Thank you. Divided by 12.
Right.
And so the next month, let's have fun with it. It grew to 5 million. 5 million times 0.5%. It's now 25,000 divided by 12.
Okay.
So each month it looks at the value
Right.
times percentage divided by 12. So if it goes down, our fee goes down.
But if it was another money manager, would that be an average price? That was an average fee for the services?
Well, actually, however many years ago when we came on board with Delaware, I believe that everybody else was higher than us.
Right, and we negotiated that, so we stayed with that.
Right, and we haven't changed our fee whatsoever since that time.
So we've been getting a bargain for the last.
Well, I believe so, yes.
Okay.
Yeah, I believe so. Matter of fact, there was a question asked earlier. Quite often, I don't want to be boring by any means, so forgive me. Quite often, you have 2 or 3 different types of ways of assessing fees. We have chosen as an institution for everything to be highly transparent. and I mean highly transparent. What you see is what you're charged, 0.5%. That's it. Many other organizations will say, we're going to charge you 0.5% for our management expertise, but then they're going to delegate it out to other managers. And they will charge a fee, and you'll never see it. I mean, I know this may sound self-serving, but it is legitimate within our industry. And so I have very often been told by people, well, I only am charged 0.5%. And then when you investigate, you have the unpleasant task of telling people, yes, ABC is charging you 0.5%, but they're delegating the bond portfolio to XYZ, and the equity to, 1, 2, 3, and the international to 4, 5, 6. And there's charges within the charges. And so your total is probably well over 1%. Then there's other types of firms that say, I'm only going to charge you 0.5%, but then they also charge you for every transaction. And so we believe that we stand out in that regard. What you see is what you get, and there's no other hidden costs. And there's even a fourth one where they use a lot of mutual funds or a whole lot of exchange traded funds which have internal expenses. So if it was 0.5% and they put you in a whole body of mutual funds from all over the map, they have their own internal expenses that you don't see on your statement. They just trim it off the top of the game. And so, again, it may seem self-serving, but we do believe we're probably the least expensive in the area.
The amount you give was $150,188.28, is that correct?
I'm sorry.
162. Now this is as of today, right?
Yeah, as of really Friday. In the sub-account, on the top right, do you have that second one?
Second page?
The second section, or the second handout? Yeah.
I guess I've got the second handout.
Yeah, it's in your,
I think
there,
it's
it says sub-account right on the front.
Over your hands, right?
There it is.
Yep.
But your basic formula is account balance times 0.5% divided by 12
Yep, and we charge it monthly.
162.
monthly.
Yes, sir.
There it is. 162.
162,000, and where all the income from the larger account flows into there. And then, like you said, on your accounting, you've accounted for, some of that is the 10% and some is not. We've just pooled it into here.
Our instructions years ago were to create that sub-account and segregate the two. And I guess it gave the board and the tribe knowledge of what was spendable, so to speak. And so because that was accessed on occasion, we were told to keep it relatively conservative. We can even increase that allocation somewhat if you wish.
Well, this 162,000, that is the total of the interest that has been earned.
Mm-hmm.
Okay? And 80% of what goes cannot be tied up because we have, our education gets 25% of that, community services gets 30, cultural preservation, I think, gets 15, and then we have other committees. So those monies, in order for the committees to be able to serve the people, have to be able to be listed. But it's the 10% of the interest that we can reinvest.
Okay.
And it sounds like that's accumulated to 90.
Right.
Okay, yeah.
Right, and we understood it was being just kept in the principal and growing bigger, but doing it, taking it out of the principal it's not growing the same as the principal. Is that correct?
Correct.
We're getting less for it
This year.
this year.
Every year prior to that, the other 9 or 10 or 11 years, no, it was growing.
Yeah.
This year we had the first time where we experienced a negative interest rate environment.
I said the trust board can act on the whole 162,000 if we want to. Sure, if we want to stick with just the money that's reinvestment, it's only 96. But
Right.
we could take this full.
Well, that
162.
162 is what we're gonna operate, part of that's is what we operate on for the rest of the year.
A small percentage of it, I agree with that. But it's still gonna be there, we're just transferring it to different kinds of accounts.
What if there,
That's up to the board.
what if there are accounts that we don't want to invest in? I mean, I know the object is to make money, but there's social consciousness that I've always kind of wondered about if we're thinking of some things that we don't want to support. Are there limits to, or do we just give you those if we are like, we don't want to invest in that because they're killing whales, you know? Just an example.
So it's a good question, a viable question. We had a rather large hospital system invest with us, and they changed their mindset on investments, and they specifically told us we could not invest in tobacco, alcohol, weapons of mass destruction.
What if you're investing in the government?
Basically, a lot of the defense-type corporations were removed.
Right?
And actually, it's kind of interesting, most of our portfolios are already pretty much socially conscious.
Okay.
Probably at this moment in time, a few exceptions of that would be the defense industry, if that's part of the category that you're referring to as social conscious. So it's probably already kind of self-policing. But yes, if you were to tell us industries that you believed it was inappropriate to be invested in, we could certainly remove them.
And that's one of the benefits of
About the liquor, I remember 20 years ago, it's about $14 a bottle, now it's $150. And it's all been sold.
Yeah, we're not that involved with the hypothetical question.
Sometimes
At
those are
some
the
point in
ones
the future, we might want to.
sometimes those
Nikki,
make the most money, so. Depends what
was that really your question?
No, absolutely. It was my question. Like, you know, there are things.
I was just wondering if you were talking about what do we not invest in because we may lose our shirt.
Well, that would be too. I mean, if I saw red flags of something, I would be like, no, don't go there. But I was asking hypothetically because
No,
there's
that's-
social consciousness.
we've had entities request that, and because we manage the money in-house, we're able to do that. Other firms actually couldn't do that. So it's not outlandish question.
They've got questions.
Is Arvest aware of the trust document and the specifications in it?
Yes.
Okay. Yes. So you're aware of how it's happening?
However, respectfully, I can be aware of it, but I'm supposed to take all my direction from the board. But yes, we've actually had meetings in the not-so-distant past.
Well, the board is supposed to take their directions from the document, so
Right,
it kind of,
right,
Yeah. We don't have any authority.
yes. Our vest operates in two capacities, as the trustee that interprets the document and as the agent. In this case, we're an agent that takes the direction from the trustee. But I am aware of its components.
Yes,
and we are complying with that.
To the best of my knowledge. There are things that I obviously do not see, but the things that I am aware of, yes, sir.
Scott, do you have a copy of the new one since we passed the new trust document?
I believe Verna gave me one.
That's all I guess.
Scott and Josh, we appreciate you all coming. I think I've kind of detected that the board might need to get together and talk in a week or two about what we want to do. I think, Scott, your recommendation is that we consider loosening up all of our trust funds to go 50% equity, 30% bonds.
I think two things I would like to propose. If the board is willing to take a little bit more risk, especially on the bond side, that we propose to you the portfolio that would allow you to do that. And the second component would be that the board give consideration to increasing your equity exposure, because bonds in general do not look like the favorite asset class that they were for the last 10 years. Equities are starting to look a little bit more prime for potential, especially when you compare it to other asset classes. So two components. And at your instruction, at your guidance, we'll be glad to present that to you however you want, or wait for your instruction, whatever you wish.
Brother, I think you're a little bit confused, I think, about this sub-account. The sub-account is the interest that the other portfolios earn, goes into the sub-account.
I know.
I don't think it's their recommendation at all that we put our whole trust monies into equity.
Well, they,
They recommended $162,010.
No.
Actually, the main account, it would be our recommendation that you consider increasing the allocation on it.
Change it a little bit also.
Exactly. Because we believe the next several years will be a very challenging time for the bond side of the equation. And potentially, as you saw in the performance last year, will be continued for the next 3 to 4 years. So I think it's a time, that would be the first recommendation. And then the second is to use the reinvestment money in a more growth-oriented manner.
do we want to request them to put together
Another
a
portfolio.
proposal of what we might be able to do? Would that be, then we'd know, or do we want to talk about it and then?
Well, personally, myself, in the new portfolio, I'm definitely willing to, the total market value of the sub-account, which is $162,010. I know we need to change that, but I think we also probably need to change a little bit with other allocations.
I think we'll step light first, go to the sub-account, work it, then further down the road.
I don't
look at the
think,
main
by
account.
no means, I don't want to put our home trust monies at risk,
No.
but I think we need to gamble with a little bit of it.
So what I'm asking, do we want them to put a proposal together for us, an example that we might look at? So if we sit down and talk among ourselves, we're still not going to be, without a proposal, know what we're doing. At least I won't.
We are going to need some guidance in that.
And we'd be happy to give you more specifics than the generalities we've talked about that might help you.
Yeah, Brent.
And some examples.
Jan, you had a question?
Well, okay, you say you have 160, you know you've got 96 that was supposed to be reinvested, so that, if you lost it, you wouldn't be losing any of your money for this year, right?
Right.
So that looks like you could get risky with it and see what happens. Just don't kill yourself if it falls.
That's what I was stating a while ago.
I
Work
thought
with the
that's what you
sub-account.
We won't have to, y'all will kill us.
Well, I mean, I can see trying with that reinvestment money, because it's not what we've been living off of, and so you have a little more leeway in it. I don't know how risky you want to be. That's way over my head. That's what these guys are for. But you're not talking about risking the money that culture preservation has planning to spend this year. That's not, that may be in there, but we're not doing that part, right?
Right.
That's all I care about.
Yeah. Community services and education are not going to let us spend their money either.
Yeah, okay.
How quick do you want to meet, and when are y'all available to have the portfolio ready, recommendations?
Would 2 weeks be,
Sir?
would 2 weeks be workable?
I believe it will.
I think so, a couple of weeks. I'd say it, but I'm on spring break next week with the kids, so probably a couple of weeks would be preferred if it'd be okay.
What say we have a meeting in about a week, and are we wanting to work with the whole 162, 96?
96.
It's their recommendations that we work with everything, just a little bit, but as far as the change in all of it to equity, I think we're only looking at 162. I don't think it's our recommendation to change everything.
Well, then just have them work up a proposal for the 162,000. And we can discuss this amongst ourselves in, say, a week or so, then have them meet us in 2 weeks.
I'm still a little reserved about whole 162,000. If we change that, where we have to do our drawdowns to meet our obligations, if you change or use the whole 162, would that be a problem to make sure that we had the money that we budgeted for the year?
No. And
That's the concern, and I'm sure it's a concern of most of the people.
we can bring, I guess you could say, several proposals and ideas, and let the board, fully understand the dynamics of each. And of course, you make your decision based on what you believe is best for the tribe. But know that we can make recommendations, formal recommendations on the main account, but also on the sub-account. We can do both.
That'd be great.
We want to obviously give you
Do
as
one
much
with
information
five
as you
and
need.
another one with just a sub-account. And that'd be
Yeah.
helpful.
That way you'll have more than enough information on all options available to you so you can make the best informed decision.
That's wonderful.
Sounds good. We'll go ahead and set the
Thank
date.
you.
I don't have a calendar.
Well, would 2 weeks from today work for both of you, Scott?
I'll be here.
Check my calendar.
I'll be here.
2 weeks from today would be on the 24th of March.
I'm actually in Tulsa all that day, unfortunately.
How about the 31st, 3 weeks from today?
Is this going to be an informal workshop?
They're going to bring their proposals.
Okay, what I'm saying, are we going to do an informal workshop to go over these, or is this going to be a special trust board meeting? If it's an informal workshop,
I think that's up to our chairman. Or the committee, I mean, the whole trust board.
right, that's
We're
what I'm
talking-
asking.
We're talking about possibly changing all of our allocations.
Right, but do we want, the next week will be our April trust board meeting. So if we have an informal workshop and have time to go over and get all the information and consider it for a week before we actually make the final decision, I would be more comfortable with that. It would be open to any tribal member to come in, but I'm gonna need just a little bit of time to think about everything that I'm told before I make a decision. Does that sound okay to everybody?
I'm agreeable with that.
The 31st
Looks good.
is good for us.
31st?
Is there a particular time that's best? Would 1 o'clock in the afternoon be good?
If my calendar is full up to date, which I think it is, pretty much open, whatever preferable to you.
31st, and then our April trust board meeting will be the 7th, so we can wait and take any action that needs to be taken on the 7th.
Right.
When is your workshop?
You want to call that a
The
special
31st.
meeting or
Is it
workshop?
open to the public? Yes.
Yes?
Correct.
I'm making a motion that a special meeting be called. Instead of just a workshop, because a lot of people think workshops are closed to our tribal members, and they're not. So,
Well,
I'm going to make the motion that the special trust board meeting
Okay.
for the 31st.
Do I hear a second?
I second.
All in favor of the motion, please say aye.
Aye.
Opposed? Scott,
Personally, I
Josh,
prefer a workshop, but I will go with the majority.
Yes, sir.
we appreciate you all coming today. And
Glad to be here.
we'll look forward to.
I know we need to update, step up from what we had. We're working on old years back premise and that, and we've got to come up to date. That's hard for me to do, I hate that, but I'm willing to do it. But, we're looking at new growth at the tribe, we're getting more new members, and we've got to see to the needs of those. We've got to grow with our money along with our tribe. So that's where we're dependent on you guys.
Joe, is your motion to hold a special meeting to review and discuss the portfolio?
Portfolios that they recommend.
So confirming that's March 31st, I believe that's a Monday at 1 o'clock?
Yep,
Okay.
right after lunch. Y'all are welcome to come and eat lunch with us out here too.
Will that be up here or downstairs in the social services room?
I think we ought to have it up here.
Yeah, up here.
Okay.
Well, that's we're interfering, banquet or something.
No, big goes on Thursday, isn't it? You don't have anything in the afternoon on Monday?
Between
No,
seven
no,
trust
it's
board
on
members
Monday, no.
volunteer to pay for your lunch.
The only problem is we
There's
got.
7 of us.
Get everybody out by 1 o'clock.
Would 2 o'clock be better?
Thank you all much.
Thank you.
Appreciate it.
Thank you.
Excuse me. On, you were saying 1 o'clock on Monday. Mondays, there's not anything going on usually, but a lot of times we have our elders still talking and visiting at that time, so could you all make it about 2 o'clock? Make sure that everybody's gone and,
Well, they may want to listen.
well, that's true too. Never thought about that.
I think by 1, they're pretty well gone.
Yeah.
Um,
Or else they want, don't.
Well, that's true. What they want to do that day. Yeah, never mind.
She's still washing dishes though.
Yeah, I'll have to close up the kitchen and it's hot.
Man,
No, I'm kidding.
goodness.
But I am still doing dishes till 2. I will shut it up so they won't be bothering you guys.
As long as you don't make me wash dishes. I'm not very good.
Thank you all.
Thank you.
Yes, I did. Roll call.
Chairman Brooks,
Here.
Lord Joe Brooks,
Here.
John Sumter,
Here.
Nikki Michael, Plummer Scott is absent, Mayor Waters,
Here.
and Verna Crawford is here. We have 4.
You heard anything from Homer, brother? Is he healthy, taking a treatment?
No, I hadn't heard from Homer today. And I think it was, I know he knew that we were gonna meet at 3 today.
I'm making a motion that we wait till the next meeting to decide if his absence is excused or unexcused.
Second.
All in favor?
Aye.
Do any guests have anything they'd like to approach the board with? Bruce?
No,
Oh. Thought you was getting up to talk.
I'm just getting a better shot of you.
Getting ready to shoot us.
Minutes of the last meeting.
I'm making a motion to approve the minutes, any, the minutes dated February the 3rd, 2014, with any corrections that anybody sees. I don't see any myself.
Do I hear a second?
Happy birthday.
Do I hear any additions or corrections? If there are no additions or corrections, all in favor of the motion, say aye.
Aye.
Opposed? No? Unanimous.
When you approve the amended the agenda, make a motion. Did anybody?
John made the motion and I seconded.
Pleasure of the board.
We're sitting at 4,014,000. We're gain over what we had last time. Still haven't gone below 4 million, so we're doing all right there.
Community services are a problem.
Community services met at 1 o'clock today, met today. We considered 30 applications. We approved 28 pending income guidelines being met if they're needed. And our next meeting will be on April 14th.
The Culture Preservation Committee still meets the third Tuesday of every month at 6 o'clock down at the Social Services Building. And we did start doing a language class at 2 o'clock on Sundays. And I've been in the process of a move for the last 2 weeks, so I've only made it to one language class out of 3, but I understand only 3 or 4 people are showing up. So I would like to report the language class and ask anybody that can to come to it. Si, you've got a question?
Suggestion, I don't think that is on the webpage. It's not, am I right about that? They put it in the paper, but don't. I don't think it's on the webpage, so we might want to do that. It might help us with that attendance.
Okay.
Whoever we forward that to Greg.
That's,
Thought.
well, it's a good idea, and we need to do
So
that
does that mean Tuesday night, the rest of the month is all?
on Sundays at 2, yes. Education Committee, Nikki Michael.
Yes, we met on June 10, 14, and we approved, let me scroll down here. Scholarships last month. We approved 50 applications, and we had 2 pending, 3 part-time students, and we okayed $15,150 worth of scholarships. That was with a lower amount. We had some VOTEC, $90, and then 2 education assistants at $50, 1 athletic at $50. So the non-scholarship total was $240. And that we actually got through those pretty quickly, and I want to thank the committee for their time and effort to be there. Today we also met, and we talked, I'll give that report next month fully, but we talked about possibly figuring out how to increase our and strengthen our scholarship funds. So one of the avenues we're going to look at is figuring out how to go about solidifying ourselves as a 7871, and that means I would call the IRS and find out the process for that, which I know pretty much is what they'll do is send us a letter if we request it, and from there we would be considered what is kind of commonly understood in the tribal world as a tribal nonprofit. And then we can seek funding from there, but we want to work hand in hand with the tribal council. No one wants to, step on any toes, and so we want to make a kind of this move in a spirit of cooperation, I should say. Does anybody have any questions about that? Okay, thank you.
Elders Committee, Mary Waters.
Okay. The Elders Committee met today, March 10th, and we gave a report on the Elders trip to Keepsake Candle and the nursing home visit. And today we passed a motion to proceed with the project to put the veterans' pictures back on the wall and make plaques to accommodate the new pictures. The cost is to be shared by the veterans and elder committees. A motion was passed to do a casino trip to Osage Casino on April 1st. We would leave here at 7:30 in the morning, and we'd have a free breakfast, and they give drawings every so often out there for money. March the 18th, our afternoon activities will be a movie and refreshments at the center. The celebration of life and chili benefit.
Mike's going in and out. What bill is for? Bruce is going in and out. Bruce is going in and out. Right, get John's mic, Mary, and leave it.
Well, is it better?
It goes in and out, honey. We hear you fine when it's working.
Okay. You heard about the casino trip to Osage Casino. Did y'all hear that? Okay, then on March the 18th of this coming week, we'll have activities. Will be a movie and refreshments here at the center. The celebration of life and chili benefit for Karen Cummings raised $1,430.10, and that will be donated to the Susan Coleman Fund. And today, Jim Manor presented a program on the language, Delaware language, for the months and seasons of the year. And our next meeting will be April 7th, 2014, and Jack Tatum will give a presentation on Delaware warriors. That's it.
Thank you, Mary. John, do you have reinvestment report?
Yes, actually, we had our first for real meeting. It was on February 19th, at 6 p.m. That was here. And we had enough people to express interest. No, reinvestment. And several questions come out, mainly like the fees that they charge, what we could do, would like to do, with our monies, especially the sub-account was kind of the main topic. But this meeting today is what basically come out of that, is more or less a workshop. Other than that, now we're going to have to wait 2 weeks. We'll get our proposals. And 3 weeks? Yeah, you're right, 3 weeks. And after the workshop, and that'll be put out then, what the outcome of that. That's it.
Thank you, John. Tribal Operations, Joe Brooks.
Tribal operations, I met with Gene and signed the voucher for the money for tribal ops to be transferred to the tribe side. I did sign the voucher, but I guess the trust board members aren't entitled to the tribe's financials anymore. I didn't get sent by email this time, so I don't know if the money's been transferred or not. For some reason, our accounting department, they was sending us financials for tribe and the trust board. Now, all of a sudden, all we're getting is the trust board, so I don't know what's been paid to the tribe and what hasn't. Jan, can you tell me that? Has the tribe received that check?
I have no idea. I'm sure it's there.
So I have no way of knowing
You want to
that
start
check.
receiving council council finances when you get trust finances.
We was receiving them all the time.
Your
Don was
bank
saying
has
it.
changed to sending them, so they don't know who to send them to, so we just correct that.
Thank you. No, she said they just changed doing it. So somebody, they didn't notice it, that's all. We just need the council to do that.
That's all I have for tribal operations.
John, do you have anything to report on the Veterans Committee?
Yes, we finally had a real veterans meeting, election of officers. Kenny Brown is now chairman of the Veterans Committee. Homer Scott is vice chair of the Veterans Committee. That way we're fulfilling the trust document that the trust board member has to set on that committee. Susan Cade is secretary-treasurer. We had a discussion over the veterans plaques, what was done, how it was going to be done. Had a few suggestions, and it was passed through the Veterans Committee that they will bear half of the expense of the pictures along with the Elders Committee like we previously agreed upon. Next meeting will be mid-April. That's all I know at this time. Susan has the minutes since she was the secretary, and I haven't seen them. So I'm kind of out of the picture, but I will step up on committee reports if Homer isn't here. I'm basically kind of like advisor, military advisor, whatever you want to call it. Committee member. And I'm still head of the color guard. I forgot that. They kept me there. Basically, that was it on the veteran side.
Do I hear unfinished business?
Mr. Chairman, I'm going to request that you go back to treasurer's report. After John gave the treasurer's report, you went on right into committee reports, and we never did approve the financials for January 2014.
Good point. Do I hear a motion to approve the treasurer's report for January of 2000? The financial report.
I'll move to approve the financial opinion audit.
I'll second that pending audit.
All in favor of the motion, please say aye.
Aye.
Opposed? Abstentions? Unanimous. New business. Do I hear any new business? If not, somebody make a motion to adjourn.
We need to set the date and time for the next meeting.
Correct.
What's councilman doing? Game? I'll make the motion, next meeting, the trust board will be the first Monday in April, April 7th at 4 o'clock at this location.
Do I hear a second?
Second.
Motion been made and seconded to hold the next trust board meeting April 7th here at 4 o'clock.
We were also unable to do our, is that better? Can you hear me now? Our education workshop, it was canceled due to weather last week, so we are having that education workshop next month before the trust board meeting at 3 o'clock. Can we have it here? Okay.
All in favor, please say aye.
Aye.
Opposed? We're adjourned.